Good health and good afternoon to all fund managers, analysts, members of the media, ladies and gentlemen. My name is Michelle Loon and I'm pleased to welcome you to Top Glove Corporation Berhad's third quarter financial year results briefing webinar. We're delighted to host you. Today we are privileged to be in the company of four distinguished spokespersons whom I have the pleasure of introducing. Top Glove Executive Chairman Tan Sri Dr. Lim Wee Chai.
Hello, good day.
Top Glove Managing Director Mr. Lim Cheong Guan.
Hi.
Top Glove Executive Director Mr. Young Lin. And Top Glove Director Marketing Mr. Lim Jin Feng.
Hello, everyone.
Today's event will comprise a presentation on Top Glove's third quarter financial year 2025 results, followed by a Q&A session. Guidelines on how to direct questions to our spokespersons will be provided later during this event. But first, to ensure we start the event on a positive note, we will perform our signature business ethics clap as well as our 5 healthy wealth clap. This underscores the importance of good health, both mental and physical, at Top Glove. We'll start with the Top Glove business ethics clap. If we're ready, let's put our thumbs up. Ready? 1, 2, 3. Top Glove, top honesty, top integrity, top transparency. Quality, quality, quality. And next, the 5 healthy wealth clap. Thumbs up. Ready? 1, 2, 3.
Top Glove, eat well, work well, exercise well, sleep well.
Healthy, healthy, healthy. Thank you very much, ladies and gentlemen. And now to start the session, I would like to invite our Managing Director, Mr. Lim Cheong Guan, to deliver his opening remarks, followed by the third quarter presentation results. Followed by the third quarter results presentation. Thank you, Mr. Lim. The floor is yours.
Thanks, Michelle. Good health and good day, fund managers, analysts, members of the media, ladies and gentlemen. Thank you for joining us for the briefing for the Top Glove third quarter financial results. In the preceding quarter, second quarter financial 25, we took off with some uplifting news. The skies had cleared. Our business was regaining altitude with profits soaring from quarter one. We were on the right trajectory. The upward momentum was expected to continue well into quarter three. However, as with any journey, there were some unexpected turns. In recent months, uncertainty concerning tariffs has prompted a degree of hesitation among some of our customers in the US initially. At the same time, increased competition in the European regions placed additional pressure on pricing. Accordingly, this quarter results reflect an altitude adjustment. Still, despite the headwinds, we remain profitable while growing our sales volume. This is a clear testament to the effectiveness of our quality and cost efficiency initiative, the efforts of our team, and the essential nature of our glove. In quarter three, our financial health continued to strengthen, supported by improved net cash flow from operating activities and a 23% reduction in net borrowings. As a result, our net gearing ratio stands at just 0.1 times. I'm also pleased to note that Top Glove achieved a commendable overall ESG score of 4.1 out of 5 for the June 2025 review of the FTSE ESG score. This places amongst the top 10% of over 700 companies assessed in the global healthcare segment and ranked number 2 in the global medical supply sector. While pockets of turbulence on long-haul flights are to be expected, they are also temporary. Rest assured, we are keeping a steady hand at the controls. And with improved visibility of tariff expected by early July, we are confident of moving forward with greater certainty and speed. With this, allow me to take you through the presentation on our third quarter performance. For the third quarter 25, Top Glove recorded a revenue of 830 million, representing a 6% decline from the previous quarter. However, sales volume rose by 4% despite the drop in revenue, primarily due to the lower average selling price and a weaker USD. The third quarter was marked by uncertainty and competition stemming from tariff development. So on 1st April, a 25% tariff was announced, leading to a temporary order deferral and cancellation by some US customers who had not anticipated the added cost. This negatively impacted sales volume in the month of April. However, following the tariff revision to 10%, strong order inflows from US resumed, driving a strong 24% Q-on-Q sales volume growth to the US market. On the other hand, competition intensified in Europe as Chinese manufacturers facing restricted access to the US market shifted their focus there. As a result of both market uncertainty and increased competition, ASP declined by 5% for nitrile glove and 3% for natural rubber glove. So for the third quarter financial 25, EBITDA stood at 117 million, a decline of 11% Q-on-Q, while Patami rose by 17% to RM 35 million, up from 30 million in second quarter financial 25. This quarter included a non-core gain of 26 million, comprising a 30 million gain from land disposal, partially offset by a 3 million foreign exchange loss on the foreign currency loan. Excluding non-core items, core EBITDA was 91 million, down 32% from 133 million in the previous quarter, while core Patami came in at 9 million. The softer performance in third quarter can be attributed to the following factors: the lower ASP, as explained above, weaker USD, which is a reversal of forex trend, saw the USD shift from the uptrend in second quarter to a downtrend in third quarter, impacting revenue translated from export sales and also the USD proceeds received. ASP raw material price mismatch normalized in third quarter, while second quarter benefited from a temporary mismatch where ASP remained high and raw material price cost declined. This advantage was no longer present in third quarter financial 25. However, on a 9 months comparison, sales revenue surged by 55% to 2.6 billion, accompanied by a 65% increase in sales volume compared to 9 months FY24. So the EBITDA was at 341 million, with Patami at 71 million, comparing a negative Patami of 58 million in 9 months FY24. The core EBITDA of 9 months 25 at RM 311 million, with an improvement of 221%, and core Patami at 41 million, which improved 129%. So from the early quarterly performance comparison as shown in the graph here, quarterly performance can be sensitive to external factors such as forex movement, raw material price trend, and ASP fluctuation, which can result in a higher movement quarter-to-quarter comparison. However, if we look at the 9 months year-to-date view, provides a more balanced reflection of the company's underlying performance. So as comparison of 9 months 24 and before pandemic with the 9 months 25, the 9 months 24 core EBITDA margin of 12% is a strong improvement from the 6% core EBITDA in 9 months 24 and 3 percentage points below the 9 months 2019 level, putting it closer to the pre-pandemic margin, reflecting overall group improvement in the post-COVID period. Next, we zoom into the two main glove type performance, the nitrile glove and NR glove. So nitrile glove sales volume increased by 4% in third quarter, driving primarily by growth in the US sales. ASP were adjusted downwards to enable cost pass-through and to remain competitive in a challenging market landscape. As for natural rubber glove, the sales volume show a slight increase of 1%. ASP were lowered in response to a declining raw material cost to maintain price competitiveness and to capture more sales in the non-US region. A 9% decline in natural latex concentrate prices contribute to a reduction in cost per carton. So based on the movement of ASP and cost per carton, margin for nitrile and natural rubber glove have declined compared to second quarter, but remain higher than in first quarter 2025. Next on our sales to various region. So overall total sales volume increased Q-on-Q by 4%. And in third quarter, we recorded a strong growth in North America, which is mainly US, with sales increased by 24% Q-on-Q, contributing 26% to the total sales. Sales in Western Europe declined by 11%, in line with the expectations, as Chinese manufacturers shifted their focus to the region following the imposition of the US tariff. Eastern Europe saw a slight decline of 2%, accounting for 21% of total sales, and sales in Asia remained stable at 21%, while the Middle East recorded a robust 43% increase, contributing 6% to the total sales. As for the products mix shown on the right-hand side, so the products mix remained relatively stable, with nitrile glove maintaining a consistent share of 60% of the total sales. Next on the capacity, current capacity, which are spreading over 3 countries. So in terms of in third quarter, we are running a capacity of 61 billion pieces of running capacity, with the utilization rate on running capacity as 61%. However, the recent month of June, the utilization rate has increased to 65% as monthly sales continue to increase after May 25. And next on the cash flow. So on the net cash and gearing position, so we can see that there is good improvement in this quarter in terms of cash flow. Operating cash flow improved to 78 billion for the quarter. However, the total cash position declined in May 2025 due to the utilization of cash reserve to repay the bank borrowings. In total, we have repaid 215 million bank borrowings during this period. And the stronger operating cash flow coupled with loan repayment reduced net debts to 461 million, a decrease of 23% or 140 million. As of 31st May 2025, so the net gearing ratio stood at just 0.1 times, significantly lower compared to the pre-COVID level of 0.85 times in terms of the net gearing. Next, update on the sustainability. As mentioned earlier, the FTSE ESG assessment, which the results were released on the 23rd June 2025. So Top Glove surpasses global average healthcare industries and Malaysia medical supplies in the assessment with a commendable score of 4.1 out of 5, total score of 5. So this places the company in the top 10% ranking in the global healthcare sector among more than 700 companies assessed. And also notably, the Top Glove ranked number 2 among global medical supply sector and number 1 among the Malaysian glove manufacturers. So although we have good scoring in FTSE ESG assessment, sadly, the company is yet to be reinstated in the Bursa for Good index. And we are actively engaging with FTSE and Bursa Malaysia to address the gaps and is working towards the re-inclusion. So going forward in terms of the outlook, in terms of the outlook, so we remain positive on the outlook of the glove industry and are confident in our ability to deliver stronger growth, sales growth in fourth quarter. As with any business, occasional challenges are to be expected. Opportunity to capture additional US sales are anticipated once there is greater clarity on tariff, particularly with the tariff on China-made glove are unlikely to be lower than Malaysia. Quarterly fluctuation in average selling price are expected, driven by market competition and raw material cost volatility, factors that are part of the normal business cycle. Market conditions are expected to stabilize over time. The final tariff decision by the US government will provide much needed visibility for both manufacturers and customers. To mitigate the impact of USD volatility on our profitability, we will maintain a consistent hedging policy. On the cost front, raw material prices are expected to continue declining gradually, which would help ease some of the pressure from price competition. At the same time, improve in utilization, which is 65% in the month of June, and expecting to go up in coming months, will drive cost optimization and strengthen our competitiveness in a challenging market environment. So with that, I'll pass it to Michelle Loon to commence the Q&A session.
Thank you very much, Mr. Lim, for the insightful presentation. Ladies and gentlemen, we've now come to the Q&A session. To pose a question, please click the raise hand icon located at the bottom of your screen. Alternatively, you may type your question at the section marked Q&A, also located at the bottom of your screen. In the interest of time, we respectfully ask that you keep to a maximum of 2 questions, including a follow-up question. Thank you. Let's begin. We'll start with the written questions we've received, and the first is, what is the management's best guess on the new tariff to be announced by President Trump? Will Malaysia still have the advantage of lower tariff compared to ASEAN countries?
Okay, Sri Lim here will answer this question. So our guess is the
the tariff 10% is the minimum lah. And before 10%, there were 24% tax on this glove Malaysia. So we are among the lowest among the ASEAN country. For those ASEAN countries, they're producing gloves like Thailand, Vietnam, Indonesia, even Cambodia. So our guess is should be about 10% plus 24% divided by 2. So should be 34% divided by 2, about 17%. But compared with China, we are still much better off. And compared with Thailand, also we are better off. So we are still better off in terms of tariff itself. I think more important is quality and cost efficiency. So we have to emphasize a lot of improving in our quality and cost efficiency. Thank you.
Okay, thank you very much, Tan Sri. Our next question, what is the current demand for gloves from clients? Has it seen an increase in demand?
Yeah, I will take that question. So I think we always say the glove demand is always there. It's a necessity. In fact, it's been growing steadily, about 6-7%, or certain year even more, 8%, 10%. And definitely we see an increase this third quarter. And because of the US tariff also, we're seeing more inquiries and more orders shifting to outside of China. So that's why you can see our sales have been growing in the past few months.
Thank you very much. That was Mr. Lim Jin Feng. And our next question is, could management guide on what will be the impact from the revision on electricity tariffs?
Yeah, I'll take the question. So there will be a new tariff, but there are changes in the how TNB will charge the electricity. There are some component being removed and some component being added. But overall, I think in the near term, we can say the electricity should be, to the end user like us, it should be lower by about 5 to 10% in the near term. But long term, because it's subject to monthly adjustment, so we still have to observe further.
I think the monthly adjustment factors is on the crude oil price movement and the exchange rate as well.
It is to replace the ICPT that is earlier, so we have to observe further.
Thank you very much. Thank you very much. That was Mr. Ng Yong Lin. Our next question, do you see any positive impact on the company after the EU imposed restrictions on medical glove imports from China?
So overall should be positive for the medical devices. Those countries are export from those outside China to Europe. But however, for the glove, because of the limit of the tender, which is set at euro 5 million, a high limit, which most of the glove tender will fall below it. But I will say that is a good direction as well, that EU may emphasize to look at out of China as well. Hopefully, gradually they may consider revising some of the limit that eventually will benefit us as well. So even for the private sector as well, the message from the EU can be good for the private companies as well in EU as well, that to look at source to diversify out of the China as well.
Thank you very much, Mr. Lim Cheong Guan. And now, ladies and gentlemen, we'll move on to some verbal questions from participants who have raised their hands. The first question comes from Chun Song Un from RHB. Chun, could you please unmute and proceed with your question?
Hi, good afternoon, management. Thank you for taking my questions. I have 3 questions here. I think we are now towards the end of June. Have you actually started seeing a better order visibility for the next 1 to 2 months, as US inventory are expected to be fully depleted? And do you expect to regain your pricing power subsequently? My second question will be on your ASP. Will you actually try to pass on the effect of weaker dollar to your customer in your coming quarter? What is the current ASP breakdown between US and non-US market? And my last question would be your breakdown between unrealized and realized forex during the quarter. Thank you.
Okay, I will answer the first question, whether order increase or not. As you can refer to page 5 or 14, right? On the 9 months sales revenue, we increased 55%. As you can see, the sales revenue at page 9. Page 9. Page 9. Okay, so 55%. So our order book has increased relatively compared with 1 year ago. In terms of profit, Patami also we increased 222%. So the order book is increasing. Basically, because we manage the quality and cost efficiency of our staff and workers are more efficient now. Less people, but high productivity. So it's much better position now. And we can see the order will continue because why China capture so big market share? Because of their price is low. So if we can match their price, we should be able to get the orders. 1-2 years ago, our selling price compared with China is about 20% or $4, $3-4. Now our price is very close. Be the same or maybe 50% higher, but very minimum. So our cost has improved a lot. China sell low price because their cost, they work very hard, very efficient, very smart. That's why their costing and selling price is low. So now we are matching with their selling price. So we are able to capture a lot of their sales. So the bottom line is our sales will continue to increase. Thank you.
Yeah, on the ASP, definitely the US ASP is higher than the non-US. I would say maybe about $150 to $2 different. And why USA price not able to move up too much? Because there's still competition within the Malaysia, Thailand, Indonesia, basically the non-China countries. There's still competition among us. So that's why the US ASP cannot be too high as per what the tariff is. Yeah.
And also, I think the slight decline in the ASP also is in view of the raw material price as well. If you look at the raw material price, I think going forward, we expecting to nitrile and natural rubber as well expected to go down by close to 14%. So during this period, we do share some of this cost saving with our customers as well. But I think once the tariff, there's more clarity on the tariff, then I think on customer side, at least certainty is there. So in terms of the orders, we expect that it will flow in. Especially even now as well, I think in terms of utilization, as I shared earlier. So current June utilization is 65%, is already better than the average of in the third quarter of 61%. I think clarity on the for the customers once tariff is fixed, so they can actually place orders without expecting that, in case the tariff is back to 20%, then they have to come out with a higher cost, import cost as well, compared with 10% right now. So on the third questions on the forex, realized, unrealized forex. So if you look at the earlier slides as well, where we have settlement of the loan, 215 million loan, and the foreign currency loan, which we have the unrealized gain accumulated early on. So when we settle this month, so we realize this unrealized amount. So you can see that the movement is a lot. That's the reason why this quarter as well in the disclosure we combine both to avoid some confusion because it's just a movement from unrealized to realized gain. So the figure can be 20 million realized gain from the loan, reversal of the unrealized of around 25 million unrealized from the unrealized gain as well. So there's a big movement. I think net we are looking at if you look at in terms of the total realized forex is close to 20 million. The reversal is actually the overall unrealized forex is a 40 million loss, but out of it, some of it is actually reflected in the reversal realized portion because of the repayment of the loan, and some will factor in the receivables as well as at 31st May the receivables, and because of the weakening of dollar as well. So in our May closing as well, we do factor in some of these unrealized loss as well.
Thank you very much. We'll move on to our next question, and it comes from Nicole Goel of UBS. Nicole, could you please unmute and proceed with your question?
Hi, thanks very much for taking my questions. I think my questions with regards to ASP. I think I know just now you mentioned that the difference in US versus non-US is about $150 US to $2. But can you just give us a bit of a sense of what is it at this point in time? Because I think previously we were looking at high teens for US and mid-teens for non-US. Is that still the same? I think that's my first question. And my second question is that I think in terms of longer term outlook, yes, once this US tariff is once we have clarity on the US tariff, what happens next, and how do you see your competitors, or at least the Chinese manufacturers, trying to open up factories outside of China? How do you see that actually progressing? Thanks.
Yeah, I'll take the first question in terms of the ASP for the US order as well. I think as what we have guided early on that early on expectation of the ASP to US to increase to 2021, and what we have realized in the second quarter, which is until February, was close to around average around $19 to $20. But then ASP was adjusted lower. Mainly because the month of April, as well as I mentioned, explained earlier, is that when the tariff was imposed, then a sudden surprise to our customers in US as well. So we do see some withdrawal in terms of demand, and coupled with the lower raw material price as well. So we do adjust some of these the ASP to around the around 18 to 19 level.
Okay, for the tariff one, US tariff one, earlier we also explained, so US tariff external factor. So you asked about the China, they try to produce outside China, like in Indonesia or Vietnam or Thailand or Cambodia. Actually, we are very happy that they produce outside China. Why? When they produce outside China, the cost will be higher. Their cost definitely about 5 to 10% higher, easily. So they will not sell so cheap when they export or produce in Indonesia, for example. The raw material they have to import from China or from other countries. The nitrile latex, the chemical. Also, they send their management staff is like expatriate. So the staff cost also high. Labor cost, it's not easy for them to manage the Indonesian or workers that outside China. The supporting industry is not as efficient as China. The government is not as efficient as in China. So it's different game. So we are very happy that they are produced outside from China. If they produce and expand in China, then we are a bit worried. Okay, so we are very happy they produce outside China. Thank you.
Yeah, on the US tariff and also on the demand. So as we always say, the demand is always there. It's just that sometimes the supply chain are all you know, whether people order a little bit more or a little bit less on hold, which sometimes will affect our order books. So because of the tariff, it slowed down a little bit, but then I think now we can see in May, June, or going forward July, we see the orders are coming back. There's only up to a certain month they can on hold not to order, but because of the demand and the consumption is always there. So now whether the tariff or no tariff announced, we can already start to see the orders are coming back.
One thing about glove, medical glove especially, whether you got tariff or no tariff, is a necessity product. You want 100%, 200%, they still have to import and they still have to buy.
The impact may be just a short-term impact. In the longer run, medical glove is still a necessity, and if you look at it as a percentage of medical cost, it's a relatively very low value.
Okay.
Right. Okay. Thank you very much. On that optimistic note, we will move on to the next verbal question. This comes from Jack, UOB Kay Hian. Jack, could you please unmute and proceed with your question?
Hi, good evening. Thank you for taking my questions. I got two questions. The first one is on what is top glove break-even cost for some of the generic gloves? Because if you compare that to China's current ASP in Europe region, is it similar? That's my first question. My second question is on the capacity targets. Does Top Glove still intend to expand to 67 billion pieces by end of 2025? Yep. Those are my questions. Thanks.
Yeah, I think in terms of the break even, of course, depend on the raw material price line and also ASP as well. But in general, based on current situation, I would say it's around 14 to 15 ringgit level in terms of break even. US dollars, right? US dollar per carton basis.
Yeah, on the capacity one, yeah, we are still on track to achieve towards what we have planned earlier by the end of the year. We will continue to monitor the order trend and then also planning to run back some of the lines which we already temporarily put it on hold or shut down temporarily that time.
All right. Thank you very much. Our next question comes from Andrew Lim, Affin Huang. Andrew, could you please unmute and proceed with your question?
Hi, morning everyone. Thanks for the session. Two questions. I'll just ask one at a time. Just to get some clarity on the June, July sort of ASPs. I think we mentioned that raw material prices coming down, so you revise it downwards. So would it be safe to assume that it will fall down to that 16, 17 USD levels? Because the 18, 19 levels was for 3Q, right?
Yeah.
Yes, and also it's a difference between the US pricing and Euro pricing. So 18, 19 is for US and the other one will be for the Euro pricing.
Okay. So that means for 4Q25, I think the average should be around the 16, 17 for US, and then for Europe will be closer to 15. I mean, safe to be around here, right?
The US then it will also depend on the tariff because it's
okay.
Early July, so then the expectation then depend on the tariff position, and
Understood.
when it's different, then pricing wise may change.
Okay, thanks. And last one from me for the July deliveries in terms of volumes. Is it able to sustain month on month? Because your June saw about an 8% increase, right, for compared to 3Q. July month on month, can it sustain?
As now, based on the projection and the orders, all that, so we are looking at increasing trend. April, I would say, is one of the lowest because of the uncertainty. Then we see May increase and June increase, and overall the quarter was 24%. And going forward, June, July, I think expecting that for quarter four, we are looking at maybe around 15 to 30% growth in terms of sales volume again.
Because 15-20% means Q on Q, is it?
Yes, correct. Yeah. So I mean, US there's a big market, and I said now we only have between 26% of the market shares. So there is still opportunity for us to increase that in the US market.
Understood. And maybe just last. Oh, sorry. Go ahead.
Oh, this average selling price depend a lot on supply and demand. Just like any other products. When the supply is reduced, now the the China, some of the glove factory, the capacity, the percentage has reduced. So the utilization rate reduced. Last time, talking about nitrile glove, they were running about 80 to 100%. So now average maybe 50, 60%. So their supply reduced. And US also, the importer, because of the tariff uncertainty, so their order also reduced and the stock level are also very low. Because the consumption is continuous every day, they need to use. So the importer order less, the factory, especially in China, produce less, mean the supply is coming down. So give another few months, suddenly there's shortage of glove in the customer's store or warehouse, there will be panic buy again. But the price will increase, but not so much, because the capacity, if your price increase, then the unutilized capacity, they will upline again. So every selling price a lot to do with supply and demand. Thank you.
That's all from me. Thank you so much, management. Have a good evening.
Okay, thank you very much. And we will take some written questions now. The question we received is, what is the gap that Top Glove needs to address to be included in the FTSE for Good index?
Yeah, I think in terms of the gap that I mentioned here is that if you recall that we were excluded in 2021 or end of 2022, mainly because of the labor compliance issue lah. But since September 21, we have fully complied with the requirement. CBP has also updated us as well from the WRO. And but FTSE has a sort of 2 years period that to be exclusion and the exclusion. So by right, in terms of calendar year wise, we should be in by 24. I think the issue mainly in terms of we have done all the corrective action. It's more of a disclosure requirement. And based on the December, then when we were not included, so we did follow up and they did give us a list of what are things that should be disclosed, and which we have actually disclosed it as what requested and acknowledged by them as well. So, but surprised that this quarter, so one of those items that we have disclosed and in terms of the working hours and all that, we have disclosed it, and they still respond it as that non-disclosure, which give us a 0 marks on that. So that is an item that they actually need and the response and to be inclusion. So in this case, it's only one item, and we have actually responded and they acknowledge, receive our reply as well. So hopefully we are following up and request for a meeting on that, and hopefully it's an error on their side. So hope that they can do the correction and actually put us back into the index. Otherwise, it doesn't make sense. You are ranked here globally, ranked number 1 among the glove manufacturers, number 2 among the medical supplies, but we are still not in Bursa FTSE for Good index. And also we requested FTSE, if any issue, they can actually clarify with Bursa Malaysia as well, which in Malaysia, they will understand better as well whether we still have any of this labor compliance issue or not. So it's a issue that non-existence, and I believe it's just that we have to continue to discuss with them.
Thank you very much, Mr. Lim. Our next question. How many factory workers does Top Glove have in third quarter and second quarter FY25?
Yeah, third quarter FY 2025, we should have around 8,000 plus workers. So compared to the previous quarter, every month we have about reduction of about 50 to 100 workers, because some come back, some go back. So, but reduction is about 50 to 100 packs. So quarter to quarter should be reduced about 150 to 300 people, 300 workers. But we still continue to improve, and also despite the reduction in the workers, we still push out more output, able to produce more output over the quarter to quarter. Continue to identify and see how to improve the workers' efficiency, the staff and employee efficiency.
As you can refer to the previous chart, the volume increase quarter on quarter 4%. This 4% increase, and the worker will reduce. about 2%. So we increase our productivity by 6%, 4 plus 2. Okay, so this indicate the efficiency of our workers has improved, and also staff efficiency also has improved. So we have about 2,200 staff and 8,300 workers. So total manpower workforce, we have about 10,500 as today, which efficiency has improved a lot. Thank you.
Thank you very much, Tan Sri and Yong Lin. Our next question, what is the expected impact of the 2% EPF contribution on foreign workers?
The 2% effect, it will be around 200,000 ringgit a month. And if you translate that into in terms of the selling price, will be 0.1% of the ASP.
Thank you, Mr. Lim. Our next question, is Top Glove impacted in any way by the changes to the SST framework being implemented on July 1st? Does Top Glove foresee any impact on domestic glove prices or margins due to SST adjustments?
Yeah. On the SST, so there is an exemption actually, even though the guideline mentioned about there is the SST imposed on the raw material, but there is an exemption, which is an exemption of the 5%, as provided under the one of the schedule as well. So it will not affect us in terms of this SST. It's just that we have to apply for the exemption.
Thank you very much, Mr. Lim. Our next question, we'll just pull that up, please. Just a minute while we pull that next question up.
We ask the...
What is your current gas tariff in MYR MMBTU?
Yeah, our gas tariff is around 45 to 50. It depends, varies from each company, but ours one should be around 45, 46. And then we foresee it will trend down in the coming quarters as well because of the global crude oil price.
Thank you, Yong Lin. And our next question, how is Top Glove adapting its supply chain or customer mix to mitigate the geopolitical challenges?
I think in terms of the supply chain, let's say in terms of raw material, nitrile, we source it from countries in whereas Korea, Taiwan, Thailand, even Malaysia as well, we have this the raw material supplies. I would say well diversified in terms of source of raw material. And in terms of customer base, if you look at customers, we are present in almost every countries in the world. So in terms of the geopolitical as well challenges, also that actually is diversified. And even from the countries of operation as well, we have the Malaysia, also in Thailand and Vietnam. So we look at the diversification. In fact, we also want to have more clarity in terms of the tariff as well, so that we can also look at expanding our operation in Vietnam as well. But as at now, we just put on hold pending this clarity in terms of what is the percentage of tariff from Vietnam, let's say versus Malaysia or versus Thailand.
China
versus China as well.
Thanks, Mr. Lim. Our next question, any issue on the shipment due to war? Also with LNG and butadiene prices rising due to political tensions, do you think GP margins could soften in the next quarter?
I think latest is that there is no war, temporary cease, and hope that will hold. And in fact, if you look at the effect on the crude oil price, seems normalized. Of course, the initial day, then there is an spike in terms of the price. Early on expectation above 100, but actually it came down. I think today price is like 64, 65, which is already came down compared with past few weeks as well. I think overall, as long as there's ceasefire, so there shouldn't be any. But there's a link between the crude oil and crude oil supply on LNG and butadiene as well. Commodity price, is also beyond our control as well. So any effect it will have a temporary effect as well on not just glove. I believe any sector as well will be affected as well. So we hope that, let us look forward. There is no war going forward, peace among all the countries.
Thank you very much, Mr. Lim. Our next question, given the intense competition from Chinese players, how can Top Glove improve its efficiency, particularly in automation and AI?
Yeah, with the as can see earlier, with the lesser people, lesser manpower, we have no choice, but we have to look into this area. So for staff also, we try to use more AI, those AI tools that we have in all the works that we do every day. Hopefully it can replace some of the those are more manual work with AI, auto-generate, auto-calculate, or generate those reports and slides. And then for workers also, we try to study what are they doing, and also further invest in certain automation that can directly help to reduce the workers, also make their work easier. Then we can move around the workers. And also the other side also, we try to push up and improve the output of the production that we have, so that indirectly the number of workers that we use to produce the glove will be better. That's what we are doing, and we will continue to do. It's a continuous process.
At the moment, our quality cost efficiency has got up very well. So compared with 1-2 years ago, yeah, as I mentioned earlier, our costing is very close to China manufacturer. That's why we could capture market share, especially the past 2 quarters. So it's still growing. Our sales order, the customer now, many of them coming back, and we can compete with China manufacturers. Thank you.
Thank you, Tan Sri, and thank you, Yong-Lin. Our next question, is the group seeing an increase in sales volume from US in the next few months? How much sales volume to US market are required to compensate for the drop in Europe markets?
Yeah, I'll take that question. So definitely we have seen an increase in sales volume from US, as if you follow the last few quarters, we have been seeing the North America percentage have been increasing. So now I think it's at 26%, and going forward will probably continue to increase. And whether how to compensate, how much to compensate, we will estimate maybe 35% to 40% when this North America percentage portion reach about 35 to 40%.
Thank you very much, Jin Feng. And the next question on everybody's lips, any dividend expected for FY 2025?
Yeah, the dividend policy, companies still continue to maintain the dividend policy, which is 50% on Patami. And as you can see from our 9 months results as well, we are in the positive Patami. As at 9 months, it's 74 million. And going forward with the quarter 4 Patami as well. So as long as there's positive Patami, so the board will look into this dividend as per our dividend policy.
Thanks, Ms. Lim. Our next question, what is the status of land disposal? Will there be any further land disposal in the future?
Okay, maybe I can answer. Yeah, we will continue to dispose those land that is not required for the time being. And we still have some land, but not much left. So, and most of the lands are profitable. So we will continue, but it's not so much like before. Thank you.
Thank you, Tan Sri. Our next question, is TG able to pass on those incremental costs like revised electricity tariffs and 2% EPF for foreign workers?
As we explained earlier, all these pricing depend on supply and demand. So as I said earlier, so the China supply has reduced, and the US stock position also reduced. So should be easier to pass the cost to the customer now. Okay, thank you.
Thank you, Tan Sri. Our next question, can you please explain why there is a nil net profit attributed to Sukuk holders this quarter? Do you expect so going forward?
Yeah, I believe you refer to the perpetual sukuk, which we have fully redeemed in February, end of February, and replaced with this senior sukuk of 800 million. We redeemed 1.18 billion and replaced with the 800 million senior sukuk. So that the term of classification treatment as well. The perpetual sukuk was treated as equity. So in terms of the profit distribution is actually below PAT under Patami level to arrive at Patami. Whereas for the senior sukuk is part of the liability side, the borrowing side. So the profit or interest portion is taken up before the PBT level. So that's a for second quarter and third quarter, that's the difference. So that's why if you look at in terms of disclosure, finance cost as well, for third quarter is higher than second quarter, even though effectively the finance cost is actually lower. It's just that a portion of this perpetual sukuk is taken up at the below PAT level. So there will not be any perpetual sukuk profit distribution going forward. Will be the profit distribution for the senior sukuk, which is part of the finance cost.
Thank you, Mr. Lim. Our next question. What is the current utilization rate in June 2025? Any plan to resume those temporary seized factories at this moment?
Yeah, our current utilization rate is around 60 to 65% of our running capacity. And we try to arrange in a way that we maximize running the lines, all the lines in the existing running factories. And yes, we have plans to in future to resume those temporarily seized factories. Now we also keep it maintained well, and then anytime we can update when we need it.
Thank you, Yonglin. Our next question is, any hedging policy to mitigate the forex risk?
In terms of hedging, yes, we have the hedging policy. If you look at in terms of the cost wise and selling price are mainly dollar, almost I think 95% will be in US dollar. And in terms of the input cost, almost close to 50% will be in US dollar. So the open dollar position is actually around 50% as well, 100% minus the cost of 50%. So of this open position of 50%, and our policy is hedge half of this, which is 50% again. So effectively, it's actually hedging is 25% of our dollar proceeds. And we go on a 1 month forward basis, or 1 month to 2 months forward basis. Most of it on 1 month forward basis. And it's an ongoing effect. Even though there is this hedging policy that we're hedging, that we have done it, there will be some of this forex effect as well, like we have seen in this quarter 3 as well, especially when the rate is on the way down. So it's different. Like for example, this quarter is a forex loss, whether it's the realized, unrealized as well. Whereas quarter 2, if you look at quarter 2, it's actually a forex gain. So in terms of there's no difference in terms of hedging policy. It's just that sometimes the direction is different, so it has an impact of either gain or loss. But I think what is important is that we have presented to look at more on the 9 months performance. 9 months performance will have sort of balance up all these 1 quarter, the headwinds or the tailwind as well, so that you can have a more fair comparison as shown in this slide as well. Otherwise, quarter to quarter, 3 months, so a movement can be quite significant or more volatile.
Yeah, on the sales side, I often mention to CG that the hedging is mainly to help to slow down the changes, so that our sales side have more time to have some pricing transfer or adjustment.
It's more to stabilize the, like we do not hope for gain. We also want to mitigate the loss as well, more to stabilize it. So it's a consistent month-to-month hedging that we are doing.
Just to slow down the fluctuation. If it change 10%, then maybe the final impact is only 5%.
Thank you very much, Jin Feng and Mr. Lim. Our final question, what is the current customer inventory level, meaning last for how many months, for US and Europe markets?
So when we travel to overseas, we make customer, when customer come or we have video conferencing, we always ask what is the current customer inventory level. So from our survey, we understand that average during the normal time means before pandemic or just 6 months ago or 1 year ago. So the inventory of average importer about 2 to 3 months. Okay, 2 to 3 months. Because of the uncertainty of the tariff and the current situation, customer tend to reduce the order. They reduce, I think, it's about 1 month. So the current stock level at the customer side may be about 1 to 2 months. 1 month, how much the difference? 1 month stock is equal to, I estimate, it's about 20 billion gloves. It's huge. So when the customer in the world give for one month extra, we have 20 to 25 billion gloves. So the stock level of the customer is very important to determine the glove selling price. So this 20 billion glove stock reduction in the market over the past 2 months during the US tariff problem or the war, so they affect the stock level. Business man, they don't like uncertainty. When there is uncertainty, when they don't know what will happen, they will hold on their orders, they will hold on their investment, they will hold on their purchase. So it's the cycle. So they will hold on means that the demand reduce. When they start buying again, they want to top the stock, and then they will panic buy. So there's in the history and the past, there always a cycle. Maybe coming one is a small cycle. Pandemic one is a big cycle. Thank you very much.
Thank you very much, Tan Sri. On that note, this brings our Q&A session to a close. Thank you very much for your active participation, ladies and gentlemen, and to our spokespersons for the responses. To round off our webinar, may we once again invite Mr. Lim Cheong Guan to deliver his closing remarks. Mr. Lim, please.
Ladies and gentlemen, so while the skies may be cloudy for now, the flights continues as we are on the long haul flights. Our destination remains sustainable growth and stakeholder value creation. So near-term conditions are fluid, but our long-term outlook is undimmed. The glove industry fundamentals remain strong, built on the growing global needs for single-use PPE in the healthcare industry, food handling, and other critical sectors. So these needs are undiminishing anytime soon. If anything, they are growing alongside greater health and hygiene awareness post-pandemic. So we'll continue to focus on what we can control, strengthening product quality, driving operational efficiency, and mitigating risks across our production and customer footprint. As we do, we remain committed to upholding the timeless principle of responsible growth and sustainability. Indeed, long-term success must go hand in hand with ethical business practices as well as caring for both people and planet. As always, we appreciate your continued trust and support as we chart a deliberate path forward, one that pushes boldly through short-term uncertainty to deliver long-term value. We also take this opportunity to wish our Muslim friends Selamat Menyambut Awal Muharram and happy holidays to everyone. Thank you.
Thank you, Mr. Lim. Ladies and gentlemen, to round off the session, we will perform the Top Glove, Top Quality and Efficiency clap in line with Top Glove's theme for the year 2025. If we're ready, let's perform the clap together. Thumbs up, ready, 1, 2, 3. Top
Top
love,
top quality, top efficiency,
top consistency. Improve, improve, improve.
Thank you.
Thank you. Bye bye.